Good afternoon, team. It is Wednesday, August 4th. All right. So a lot of buyers believe that prices are too high right now and that there's several reasons that could cause prices to go lower. This is causing a lot of buyers to sort of exit stage left or push the pause button on their search and just kind of sit back and see what happens next. I understand the thought process. And I do want to show you a couple things, particularly as it relates to mortgage rates. So I'm going to share this real quick. And, what is going to happen next? Today was a huge day, huge day. Oh, man, I got to be honest. I don't like the formation on the chart, which is where we're going to look first. So this is Derrick Evans, VA Home Loan Specialist, NMLS 155010. Call, text, email if you want to buy or refi. Happy to help. Let's take a look here. Let me get rid of the graphic. My one-man production here. All right, so today was what they call a whipsaw day. You can see the lock alert that was issued here in the upper right-hand corner of the screen. And, we in Barry we trust. Barry B runs this site, mbshighway.com. Every loan officer should be on this site. I think there's a couple others that do the same thing, but I think Barry's the best. And what this does, this gives us a look at a market that you really can't get a look at. I can't pull this chart up on CNBC. He has to go and pay for data feeds and do all kinds of things, get permissions, license it. And that's why it costs money, to be a member on this thing. And so this information is, for the most part, been hidden from the public for pretty much ever until they started coming out with this about a decade ago. And what this does is it gives us great insight into what's going on. So recap here, we've got a great trend line going here, which held today. And that was really the key for me. The key was that this trend line held right at the 200-day moving average, which is this blue line right here. And that was super, super crucial because we had a whipsaw day. So what that means is, we fluctuated a lot from top to bottom. And that's pretty unusual for bonds. Bonds move pretty slowly. All of these big candles that you see, though, are very unindicative of a bond market. This kind of candle right here is more indicative of what the bond market does, or this kind of candle right here is a huge up day for a bond market. We don't see candles like this one and this one and this one. You just don't see this that often, but we have been since the Fed's been manipulating the market. Now, what's important about today and what happened here with this, what's called an indecision candle. So when you have a wick on the top and the bottom, and they're pretty even, meaning it's not like this one here, where you've got obviously a lot more wick on the bottom and the small candle in the middle. This is called an indecision candle. And this is where the market is varied wildly. Buyers and sellers completely disagree on price, and you have a whipsaw kind of day. So at one point today, we were actually down. We were below this 200-day moving average, and that was pretty scary. That's why we got the alert to lock. It did cause the reprice for the worse. I was able to lock some loans, which is great, before that reprice. Most lenders reprice today. Some didn't. Some have a steadier hand. They wait to see what happens. So the trend line held, which is good. So let's talk about the good things first before I show you what we might be looking at. So the good things are trend line held, 200-day moving average held. We're still in a good position. We don't have a long ways to go to get through these couple pieces of resistance here. We've already been above it. We've closed above it. And so, the path to higher prices is not as brutal as it was when we were down here, trying to knock on the door. So that's an important piece of info. And so those things are all good. However, what happens after an indecision candle typically? Indecision candles usually mean who knows, but it usually means that the market, one side is going to be wrong. The side that's going to be wrong is going to lose big. And most likely, we're going to see a pretty big move one way or the other. So we're going to see a move higher. We're going to see a move lower, but we're going to see a big move here from this. That's typically what the indecision candle is going to tell us. And, that's what we should expect. However, if we trace back, when was the last time we had a similar candle? And what happened there? And this is where things might look a little more negative. And remember here, we want bond prices to go higher. Bond prices going up means interest rates go down. There's an inverse relationship there between the price and the yield. So over here, on this day, which was a rollover day, we had a 48 basis points variance between the high and the low. Today we had a 40 basis point variance. This was also an indecision candle, although it was green, and this one's red. So we had a positive day versus a negative day. But that's about as close a candle as I can find in recent history. And this is within the last couple months. This took place in early June, so a couple months ago. After that, we saw a massive, massive sell-off. And in fact, that particular indecision candle was the top and was a signal for us, although we didn't know it at the time, that insiders knew. Because remember, the Fed is buying bonds all day. So they're buying bonds all day in like 10-minute increments, market orders. So there's a buyer in here all the time. So if sellers are going to sell heavy, they can wait and let the buyers buy it up, and then they can come in and they can knock it down. And that kind of felt like what happened today, except for there seemed to be a little more panic involved. And that part I haven't got figured out yet. But it's very clear that there are people who know, people with a lot of money who are in the market that know more than you and I do. And so that being the case, look what they knew here. They knew that this Fed announcement was coming. It was going to be brutal. So these people, the smart money's getting out, longer wick on the bottom, right? The smart money's getting out. And then over the next couple of days, we saw a sell-off continue till we got the big one on that Fed release on that day that Jerome Powell came out and said, hey, yeah, we're considering tapering sooner rather than later. He has since then recanted that and said, we're nowhere near even talking about it, so shut up, basically is what he said last time. So if this repeats, then we've got a long ways to go. I mean, this went from 101.40 down to 100. It's like a 120 basis point move in 4 days. I really hope that's not what we're going to see here. If it is, though, you know, we're going to be heading back down to around this area, this support area here. And that's going to be a massive, you know, increase in interest rates. When I say massive, you know, it could be up to 0.5%. So that's kind of our worst case scenario here. To answer the question of the day, which is, will that cause, you know, will that cause real estate values to get worse or to go lower? We can go back and we can look at this particular movement right here and see when that happened, you know, that didn't slow the market down one bit. In fact, that was, you know, the market was moving very, very quickly at that time. The market is moving slower now than it was back then, which is better for buyers. And there are a lot more buyers being able to take advantage of a lot more offers getting accepted. But what you're seeing, what you might see here, if this were to happen, is you could see potentially more buyers exit stage left. I don't know if it would be enough to change what's happening in the market. I don't know if it would be enough to change the momentum that is already in place. Because remember what we talked about yesterday, even a 50% retracement, you know, to somewhere in here is still totally bullish and right in line with, you know, what we should be expecting if this trend is going to continue. And it's just kind of like we got right here. Like this was about a 50% retracement. If you go from here to here, you know, about 50% is about right there. And so you get this move up, 50% retracement, continue moving up. You know, 50% retracement on the macro, continue moving higher. That's totally normal. So if we do get this pullback, it's not necessarily bearish for rates, but it could be something that impacts the market. Hard to say. We do know right now that almost a third of the transactions that are taking place here in San Diego are in cash. A third, all cash. Not good for loan guys like me who need to do loans. But, you know, it is what it is. It's helping people win. It's investor money, big investor money. It's billionaire money. It's fund money. It's people who have done well in the stock market that's up 500% in the last 15 years or whatever, 12 years. You know, there's a lot of capital out there. So, you know, will a rise in interest rates cause prices to go lower? It could. I don't see prices going too much lower. If we got a little breather, like I said, that's a great buying opportunity. But remember, there's institutional money buying real estate right now. So I think if rates do pop, okay, if rates do go up and it does create a buy opportunity, here's the advice I'm going to give you. This is the savvy thing to do. It's counterintuitive. I realize that, but trust me on this. It is the right thing to do. If it's the case that rates go higher and this plays out in a negative, the way that it did last time we saw this formation, if that does happen, here's what I want you to do. Be smart about it. Pull the trigger. That is the time to buy. If everyone gets scared off by it, go ahead and buy. Why? Here's the thing about purchasing real estate. with interest rates. If you get into an interest rate, let's say we go down to here and rates go from, on an average VA mortgage from 2.5% to 3%. Okay. Which that sucks, but still it's only 3%. And so you get 3%, and then you buy and you're at 3%. So if you're at that point and then down the road, rates never go lower, in other words, you can't refinance, then great. Then you caught the lowest point that you could, right? If rates never go lower than that, then that will be the lowest point remaining on the timeline of forever. So great. Glad you took advantage while they were still at 3% and marching their way up to 4, 5, 6, or wherever they're going to be headed. Most likely, there will be a better chance to refinance down the road. And that's what's great about refinancing, is that you get into a property at the time that makes sense for you in your life. And when an opportunity to refinance and save a bunch of money presents itself, then you take it. And if your loan officer is on top of things, they'll contact you ahead of time. They'll let you know when you're eligible. They'll let you know when rates are low, when you can save some money. I make those calls all the time. So the buying opportunity could come if rates slip. Now, what if it goes the other way? Let's get positive for a second. If we go the other way, if it pops 120 basis points higher, we're back at the all-time lows for mortgage rates, and that would create a buyer frenzy. So let me ask you this: if you were a buyer, which would you prefer? Would you prefer us to head back to the all-time lows in interest rates, where I can calculate payments for you and show you a really low payment on a really high price, and so will everyone else? So back to bidding wars and pure madness. Or would you rather see rates go up 0.5% versus down 0.5% and have more opportunities to get an offer accepted, more opportunities to actually get into a place without getting to a bidding war and have to give your firstborn? Which one would you prefer? That is the question. So it doesn't matter what you prefer. The market's going to do what it's going to do. But what I'm telling you is, if you look at that, you'll realize that actually, you know what? It probably would be better for us if rates popped up a little bit so we could get in. And overall, like I said, this macro trend is still going to be in play. So that's what we're looking at right now. That's what I'm really paying attention to. Tomorrow is absolutely huge, 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 huge. We can see if we trace back to this early June candle, the only thing that we have to really go on that's similar here, there was a big gap down. So the market made it very clear what was going on the next day, where this thing was headed. And so tomorrow for me is a very big day. I want to see us with a green candle tomorrow. I want to see us close higher than we did today. And hopefully above these two resistance levels. We close above here, I'm going to feel really, really good about this trend line holding and us continuing to march higher. So hopefully that'll happen. If you're in a purchase contract, lock the rate. Don't take this chance. You can float down if rates improve. If you're looking at a refi, I would pull the trigger here. Unless you don't have enough savings on the table. If you don't have enough savings on the table, sit back and wait. Maybe we'll get there. Maybe we won't. If we don't, you're probably still fine with a great rate. If we do, take advantage. So I'll keep you posted on that for sure. That's the big thing we're looking at right now. All right, let's dive into a couple other things here that I want to make you aware of. We just do a little check-in. The Dow's down 300 points today. S&P down 20. The NASDAQ's still running. Russell took a hit. Oil got hit today pretty hard. Down under 70 now, almost $68. Really, really interesting that they're saying that it's the Delta variant that's caused this. Now, if you've been following me at all, for certain it's not the Delta variant. Okay, it's market manipulation in the oil, and they're using the Delta variant as the excuse. But whatever the reason, it's creating an opportunity, in my opinion, to get in on oil, as it's certainly likely to go higher. Now, and if we get a worldwide lockdown again, then that would cause problems. It definitely would. But there it is. Oil prices. Here it is. Oil prices fall on U.S. crude stock build. Delta variant spread. So the stock build makes way more sense, but it is what it is. I thought this was interesting. World Health Organization asks wealthy nations to hold off on COVID vaccine boosters at least through September. That's interesting. Why? The agency said the halt should last at least 2 months to give the world a chance to meet the Director General's goal of vaccinating 10% of the population of every country by the end of September. How did the boosters have anything to do with that? Quote, we need an urgent reversal from the majority of vaccines going to high-income countries to the majority going to low-income countries, said Derrick. Okay. So they're basically saying, hey, we don't want you to do the boosters. We want them to go somewhere else. And I think that's great. You know, if you can make that happen. I don't know that the vaccine does anything. We don't really know if it does anything. I know a lot of people believe in it, want to take it. If you like it, you want to take it, great. Want to wear a mask, great. But this is America. We shouldn't be forced to do anything like that. So we'll see. We'll see. But I thought it was interesting that the WHO weighed in on that and that they are trying to get medicine to people. You know, I mean, the thought is good, at least. This is really interesting. Target's going to pay 100% of college tuition and textbooks and bid to attract workers. Hello. If this is for real, which it very much appears to be, share this article, okay? Share this article. There are a lot of people out there. College has gotten extremely expensive. This is huge for people who need help paying for college. 100% of college tuition to work at Target? That's a great deal, team. Please share this article. Please share this. I know you know someone who has kids head to college that they're looking at that bill, not interested in it. Share this article. And here on the pro side, Citi sees a correction coming because too many inexperienced investors are plowing into stocks. I agree with this. This has been going on for a while now. We've got a lot of macroeconomical issues that have yet to really come to fruition. We have yet to see what's really going to take place with these yet. So I would be very, very cautious with your stock portfolio here. I said it before, you want to sell off a piece, sell off 25%, 50%, and then immediately start. If you do that, don't just set it off and then wait for some, perfect time to get back in. You've got to start the dollar cost averaging, reintroduce that money into the market over the course of time. So if you have a $100,000 account, you sell half of it, 50 grand, reintroduce $2,000 a month, buying back in every month for 2 years. So that way your dollar cost averaging over the next 2 years, hey, I think the stock market's going to fall. Doesn't mean you have to try to time it perfectly. Buy in over time still automatically, so you don't have to think about it, but just spread it out so that way if you're right, okay, you'll get in at a lower price still, right? If you're trying to do anything else, it's too hard. You'll lose. Trust me. Just trust me on that. So tomorrow's a big day, team. Let's see what happens in the mortgage bond market. If we can get a move higher here, I will be doing a dance. I'll be wearing my green shirt tomorrow. You can count on that. And hopefully we'll get what we are looking for there. If you guys have any questions about home loans, that's what I am here for. You can call me, text me, email me anytime. Looking to buy or refi. And let's see, we got a comment here. This will drive up prices significantly if that becomes a regular common benefit. Yeah, I see what you mean there on Target. Yeah, so if employers have to offer to pay tuition, stuff like that, it would drive up prices. Yeah. Well, I mean, the thing is also it costs them money to be understaffed too. So it's not like they're coming at it from a standpoint of growth. They're coming at it from a standpoint of sustenance. And that is a different standpoint for a business to be coming at something. So if they don't have enough staff there to check people out, it causes people to go elsewhere, causes people not to want to buy as much stuff, causes more people to want to go through the self-checkout and not buy alcohol and all that stuff. So there's a big cost to them not having the staff. And so if they're looking at it that way, like, hey, it's an investment for us, I'm sure they're only going to pay for your tuition while you work there. So you're going to have to work there for a long period of time in order to make that work. I mean, it's not they're just going to give away your tuition if you go work for there for 2 weeks. There's going to be some caveats there. So I wouldn't anticipate that to be, like a golden goose thing. But if there's people who want to go to college and don't want to have $100,000 to pay back when they're done or more, I almost don't even see people with that little debt anymore coming out of college. So if you don't want all that, then my suggestion would be, to look into things like this, or like Cal State San Marcos, also a great option, by the way. If you live in San Marcos, you go to Cal State San Marcos, tuition free. There's some cool things out there. You just got to be smart and research these things a little bit, and try to, try to figure out ways that will work. And, we have to tell our kids sometimes, some tough stuff. I mean, for my kids, I've told them, hey, I'm going to save some money for you. It's going to be yours when you're 18. You can go to college. You can go to Europe. You can take it to Vegas for one crazy night. You can do whatever you want, but I'm done saving you money at that point. So I'm going to show you, I'm going to give you advice on what I would do with it. After that, you're going to have to figure it out. You have to figure it out. So at some point, we got to throw them in the pool, man. We got to do it. They got to learn just like we did. And it's better to learn tough than it is to learn easy. So you guys have a great day, and keep you posted tomorrow. Fingers crossed.